When most people hear the phrase building wealth with crypto, their minds instantly jump to fast money, big pumps, and risky trades. They picture meme coins shooting up thousands of percent in a week, or some tiny altcoin promising to be the next Bitcoin. And sure, those stories grab attention. But let's be real, those strategies are gambling. Most people chasing those coins end up losing money, and often they walk away thinking crypto is just a casino. The truth is, there is a safer way to build wealth with crypto, even in 2025. And that's exactly what I'm going to talk about in this video. Not hype, not get rich quick nonsense, just a long-term, steady approach that actually works. The safest way to build wealth in crypto comes down to three core ideas: patience, diversification, and discipline. Now that might sound boring at first, but here's the thing. Boring is what actually makes people rich. The ones who constantly chase hype end up burned. The ones who quietly stack, stay consistent, and ignore the noise are the ones who come out years later with life-changing portfolios. And I want to show you what that looks like, step by step, in a world where the crypto market in 2025 looks both full of opportunities and full of distractions. Let's start with the foundation. If you want to build wealth safely in crypto, you need to anchor your portfolio around assets that have stood the test of time. That means Bitcoin and Ethereum. Now, I know you've probably heard this 1,000 times, but there's a reason. Bitcoin has been around for more than a decade. It's weathered multiple crashes, and every single time it's come back stronger. Institutions are buying it, ETFs have been approved, and it's becoming part of the financial system itself. Ethereum, on the other hand, is the backbone of decentralized finance, NFTs, and thousands of applications. It's not just a coin, it's an ecosystem. In 2025, these two assets still represent the safest core for a crypto portfolio. They're not the fastest movers, but they're the most reliable builders of wealth over time. Here's the key. You don't just throw all your money into Bitcoin or Ethereum at once. You use dollar cost averaging. That means you set aside a fixed amount of money, say $100 a week or $500 a month, and you buy consistently, no matter the price. Some weeks you'll be buying at highs, some weeks at lows, but over time, your average cost evens out. This takes the emotion out of investing. You don't have to worry about timing the market. You just keep stacking, and eventually, when the market grows, your position grows with it. The investors who did this quietly during 2018, 2019, and 2020, when everyone else was calling crypto dead, ended up multiplying their portfolios by 10 times, 20 times, even more. The same strategy still works in 2025. Now, does that mean you should only hold Bitcoin and Ethereum? Not necessarily. Diversification is another pillar of safe wealth building. Think about it like this. If you were investing in the stock market, you wouldn't put 100% of your money in just Apple or Tesla, no matter how strong those companies are. You'd spread across industries. The same logic applies to crypto. A safe wealth-building portfolio might look something like this: half in Bitcoin, a quarter in Ethereum, and the rest spread across a few high-quality altcoins. Notice I said high quality, not random new tokens promising 1,000 times. High-quality altcoins are projects that solve real problems, have strong development teams, and have proven communities. In 2025, that could mean Layer 2 scaling solutions, infrastructure plays like Chainlink, or blue-chip DeFi platforms that have survived previous cycles. But here's where most people go wrong. They overexpose themselves to small caps and think they're diversifying. Buying 20 low-cap gaming tokens or meme coins is not diversification. That's just gambling in bulk. Safe diversification is about balancing stability with upside. Bitcoin gives you the anchor, Ethereum gives you the ecosystem exposure, and a handful of strong altcoins give you growth potential. Together, that's a portfolio that can withstand market crashes, but still benefit massively when the market runs. Now let's talk about another overlooked part of building wealth safely: custody. If you don't control your keys, you don't control your coins. We've seen exchanges collapse. We've seen platforms freeze withdrawals. And every single time, people lose life savings because they trusted a third party. In 2025, this lesson is more important than ever. The safest way to build wealth in crypto isn't just about what you buy, it's about how you hold it. That means using self-custody wallets, preferably hardware wallets, and making sure your seed phrases are backed up securely. It sounds simple, but you'd be surprised how many people skip this step and pay the price later. Remember, the safest portfolio in the world means nothing if it's sitting on an exchange that suddenly shuts down. Another layer of safety comes from staking and yield, but you have to do it smart. In 2021, everyone was chasing crazy APYs of 100% or 1,000% in shady DeFi protocols, and we all saw how that ended. In 2025, the safe way to earn yield is through established, secure networks. Ethereum staking, for example, allows you to earn a steady return while securing the network. Other large projects like Cardano, Polkadot, or Cosmos offer similar options. The yields aren't sky high, but they're steady and sustainable. Think of them as dividends on your crypto. They compound your returns over time without exposing you to unnecessary risk. The key is to avoid chasing anything that looks too good to be true. If a platform is offering insane returns, it's usually because the risk is equally insane. So let's piece this together. A safe wealth-building crypto strategy in 2025 looks like this. Consistent dollar cost averaging into Bitcoin and Ethereum as your core holdings. Diversification into a small number of proven altcoins. Secure self-custody of your assets, and sustainable staking for yield. That's the framework. But there's one more ingredient that really makes or breaks it, and that's discipline. Because the hardest part of building wealth safely isn't the buying. It's the holding. It's the patience. It's sticking to your plan when the market dips 50% and everyone on Twitter is screaming that crypto is dead. It's ignoring the hype when a meme coin is trending and promising overnight riches. Safe wealth building is boring day to day. It's exciting only when you zoom out years later and realize how much your portfolio has grown. And that's where most people fail. They get distracted by short-term noise and forget the long-term vision. Here's something worth remembering. In every single past cycle, people looked back and said, if only I had just kept buying Bitcoin and Ethereum consistently, I'd be set for life. And yet every single cycle, people get caught up in chasing the next shiny thing. Don't make that mistake again in 2025. Crypto is volatile, yes, but volatility is your friend when you're playing the long game. Every dip is a buying opportunity. Every sideways market is a chance to accumulate. Every panic crash is a discount sale. If you can train yourself to see it that way, you'll always be ahead of the crowd. Now, I want to be clear, safe doesn't mean risk-free. Nothing in crypto is completely safe. There will always be uncertainty, regulation, and market swings. But what I'm describing here is the safest relative strategy. It minimizes risk while maximizing the potential upside that only crypto can offer. And that upside is huge. Because while Bitcoin and Ethereum may not 100 times from here, even a 5 times or 10 times on a core portfolio is life-changing when you compound it over years. Add in some well-chosen altcoins that could deliver 20 times or 30 times, and suddenly, building generational wealth with crypto doesn't sound far-fetched at all. It sounds realistic. So let me paint a picture. Imagine you start in 2025, consistently buying Bitcoin, Ethereum, and a couple of strong altcoins every month. You keep your assets in cold storage, you stake where it makes sense, and you ignore the hype. Over the next 5 years, the market goes through ups and downs, bear markets, bull markets, corrections, rallies. But through it all, you never stop. By 2030, Bitcoin might be at $500,000. Ethereum could be pushing 10 or 20,000. Your altcoins, if chosen wisely, might be worth 10 or 20 times what you paid. Suddenly, that boring, safe strategy has turned into a 7-figure portfolio. Not because you took crazy risks, but because you were consistent, patient, and disciplined. That's the safest way to build wealth with crypto. And here's the last piece: mindset. Safe wealth building isn't just a financial strategy, it's a mental strategy. You need to detach from constant price watching. You need to remind yourself that wealth is built in years, not days. You need to zoom out, focus on accumulation, and treat crypto as a marathon, not a sprint. The people who panic, sell in dips, or chase hype in pumps are playing checkers. The people who stick to their plan are playing chess. Which one do you want to be? So in 2025, when you see the noise, the memes, the new projects promising crazy returns, remember this video. The safest way to build wealth with crypto isn't flashy. It won't make you rich overnight, but it will make you rich over time. And that, to me, is the real goal.